Right, come on then, everyone, as we head into European trade on Tuesday, the 13th of February. We'll have a look across markets and see what's going on, what's up, what's down. You can see Nikkei swords. We'll have a look at the Nikkei in a minute. It's just ripping through the roof, 34-year peak, and it just continues its move higher. I mean, it's been trending higher for years. Obviously, give and take a few months with a bit of a pullback and stuff, but ultimately it just continues to rip higher, which is obviously due to the fact they keep their ultra loose monetary policy. Apart from that, you got inflation data ahead, dollar steady ahead of US inflation report. Now, I'm gonna presume there's not going to be that much price movement into CPI today, as we do await the US latest inflation report. What that means for us, we'll have a look in a minute once we get around to the calendar and around to some charts. But Bitcoin hits 50k level for the first time in more than 2 years. Maybe be interesting one if that got back to all-time highs. I mean, talking about expectations of interest rate cuts and last month's regulatory nod for US ETFs. Again, I mean, there's a couple of things which are supportive for the price of Bitcoin, and Bitcoin's just kind of running with it, and people continue to buy it. And yeah, I mean, it's been ripping higher over the last week, and so it doesn't show any signs of slowing down just yet, which is an interesting one. I mean, what all-time high is that? Like 68,000, I think they are, something like that, just below 70k. I mean, a million miles away from that now, which is, I mean, after the way cryptocurrency performed over the last couple of years, certainly is an interesting turn of events. Apart from that, not a lot in the way of fresh kind of fundamental drivers. Not been a lot going through markets in the last kind of 10 days, couple of weeks, but we do have inflation a bit later on, which we will have a look at. Stocks are a bit mixed. There's nothing really much to see there. Asia Pacific equities are again a little bit, well, I mean, they're mostly positive, but the Nikkei leading the way to the top. So I don't know what's up with this grid. I mean, it's a bit all over the place this morning. I don't know why, to be honest with you. Some of these markets aren't showing prices, and then you get the Swiss franc, which is 7-11, which it's not. It's half an hour delayed. A few of these are half an hour delayed. A few of them are up to date. So I don't really know what's going on with some of these. But this one, CAD yen's at 603. So, but for the most part, I mean, currencies are just a bit mixed, apart from sterling and the Swiss franc, which we'll have a look at now in a minute. US dollars, a bit all over the place in today's trade so far, obviously due to the fact that you have this a little bit later on. Now, what do you expect out of that? I mean, I think you got to look at it in one or two ways, or kind of one or two scenarios. I think if you get, obviously you got the core CPI print, and you've got the headline print. I think if you come in above consensus means inflation remains sticky, means the central bank have to at least talk a hawkish game going forward, and that's positive for the currency. Where that sends stocks is a bit more of a difficult question. I would prefer to trade the currency in that particular situation. On the flip side, if you get miss on consensus for inflation, you get miss on consensus for inflation, well then that shows inflation coming down faster than markets had anticipated or analysts had anticipated. Therefore, the rest of the economic data remains positive. Inflation continues to come down. Stock markets or risk assets should take that in a stride and run with it, I think. So below consensus, I think stocks are your easier trade, long some stocks. Above consensus, I think the dollars are your easier trade, long some dollars. That's kind of where I'd focus my attention as we head towards 1:30 today. I wouldn't try and overthink it. I mean, obviously you got to wait for the data to come out, but I guess I wouldn't try and overthink it too much. That's how I'm thinking heading into 1:30 today. But we'll see how that pans out a little bit later on. Unemployment figures, labour market figures out of the UK. Previous 3.9, consensus was for it to tick up and in fact tick down. Average hourly earnings including bonus, the low impact data releases excluding bonus, and that again be consensus as well. So positive labour market figures across the board has sent sterling higher. It is struggling up at that 126.50 level, but you'd have to imagine that probably folds. I mean, I've been calling for bullish sterling for a while. If that goes and posts, I mean, it has posted a positive. That has posted positive labour market figures this morning. Inflation, if you can get that slightly higher in tomorrow's session again, that should be a pretty easy trade. Long some sterling. So we got the first one that we were hoping for this week. Sterling have popped higher. Can we take advantage of it? It gets above 126.50. Maybe some break and a retest, something of that nature to try and get back long. Swiss inflation 1.3 versus the previous and a consensus of 1.7. You can see dollar Swiss ripping at the moment. I say ripping, it's what, good 4, it's 40 pips higher. It's not a bad move really in the space of a few minutes, so kind of reduces the need for any more rate hikes, brings the prospect of rate cuts back towards Switzerland and the Swiss National Bank, and then that is just a downright negative for the Swiss franc, which again it can be shown in the charts. See it blasted higher on the release and has continued higher post release, and that's dragging kind of some of these other currencies with it. I mean, a bit of dollar strength in that, euro dollar weakness again, which is US dollar strength, is kind of dragging a few of these other currencies with it, but nothing much for now. I wouldn't expect you to get too much price action or too much noteworthy price action as we head into inflation today. US stocks, they're ripping yesterday kind of after the open, for a couple of hours after the open. You can see the S&P, the Dow Jones, the Nasdaq, the Russell all had a pretty good opening to the session yesterday, but all those gains were quickly reversed. Apart from the Russell managed to kind of chill out at the highs and maintain those gains. The S&P 500, the Dow Jones, the Nasdaq all sold off after that move higher, which again is not really too much of a surprise. For me, the surprise was the fact that it actually started rallying aggressively in yesterday's session. I thought markets would just chop sideways until 1:30 today. So I wouldn't imagine we get much action across any of these markets until you get inflation a little bit later on. Bond yields just all over the place. You can see the 10-year, 2-year all over the place. I'm not even going to bother talking about that till we get into inflation a little bit later. Oil continues its move higher. That's all. Yeah, you see Bitcoin. You can see Bitcoin just kind of hanging out 50,000. I would have expected a bit of a bounce back off 50,000 to begin with, but and you're kind of just chilling just up there again. You know, any US dollar weakness in today's session off the back of CPI is probably going to continue that or help continue that move higher. So keep an eye on Bitcoin if you are a trader of the cryptocurrencies. Gold trending lower over the last kind of week due to the bond yields trending higher. Relationship is pretty common in financial markets and is probably likely to continue. But main focus of today has to be CPI. You got to keep your eye on CPI again. Miss on consensus, probably long stocks are easier trade. Beat on consensus, probably long dollars is your easier trade. And we'll update further as and when we get to it. But best luck if you try and trade it. Get stuck into it if you can. Try and make some cash for yourself. Hopefully it doesn't come in line with consensus and we actually get a move.